All day long, asset classes across the board,
and why does it matter?
Why do charts matter? Technical analysis?
They really don't. It's Josh. I think charts are basically a waste of time.
Yeah,
Thanks for coming in, though, JC.
Thanks for having me, Josh.
No problem.
Josh and I have been talking about charts and technical analysis for years, and he's coming around.
So, JC, tell us what it means. You're a chartered market technician with the Market Technicians Association. How many of those are there, and are you basically a Jedi?
We're seeing more and more every day. Every time I go to a Market Technicians Association symposium, Bloomberg does a lot of sponsorship there, right. And I'm seeing more and more every day.
Why do you think it's this concept where people feel the fundamentals and economics and things like that have failed them? So it's almost a question of, well, how can I get right to the only thing that matters, which is price, and how can I study that? Is that what's driving this increase in interest in technicals?
Well, I think it's a combination of a lot of things. I think the fact from a risk management perspective, I think is the most important thing. If you're not looking at price, how are you going to manage risk? At what point do you say, listen, I'm wrong? I don't think technicians have egos. It's not about being right. It's about making money and protecting that money. And I think that's the most important thing.
Recently, you wrote about seasonality and how it's a powerful thing. Explain why when it comes to the charts.
Well, that's one part of technical analysis that a lot of people don't realize. It's not just about looking at charts and patterns. There's a lot more to it. At the end of the day, what we're studying is the behavior of the market and its participants. And the way the market behaves during certain times of the year is important to pay attention to. Think about coming into the beginning of the year. Investors around the world have money to put to work. So what happens in January tends to tell us a lot about what's going to happen probably for the rest of the year.
Well, what's the good stuff right about now?
Well, as far as seasonality is concerned?
As far as seasonality.
Well, summers, typically slow down. I think that's normal. We saw that last year. We saw it the year before that. I think it's normal. Investors go out of town.
Perform well? What will perform well through the summer?
JC, you had told me earlier this year that natural gas was set up to potentially be the trade of the year. And you mentioned that you were looking for a false breakdown that would catch everyone leaning the wrong way, and then a massive rally, which usually follows a false move. And in fact, that's actually what's been happening. And as you in the studio, nat gas is trading at a 5-month high. Can you tell us a little bit about that trade and how people could possibly benefit from it?
Yeah, I think you make a great point. We came into the year mid-February, late February, when everybody was just, natural gas.
Maximum pessimism.
Oh, it was going to zero.
Right.
And, that really catches my attention. When there's blood on the streets, you want to pay attention a little bit more. And sure enough, we expected, and momentum still had not, shown any divergences. There was no reason to like it. And, we were in the camp that it was going to roll over and make a new low. But going into March and April, that low, I think, was probably only going to be temporary. And sure enough, that's exactly what happened. We're actually up almost 50% off of those April lows.
How should investors play if this rally off that false breakdown is going to continue? How should an investor position themselves?
Well, you got to ask yourself what your time horizon is, and what kind of investor you are. I don't think you need to just dive right in. One of my favorite things that you and I have been talking about for a few months is, a natural gas to crude oil ratio.
So a spread trade, be short one, long the other.
I like to look for trends, and that trend was a little bit out of control for a while. Oil to natural gas hit 54-1, and it's been crashing ever since.
Well, we're going to have more with you, JC Parets, allstarcharts.com. We have to talk about crude and when crude may hit a bottom. I also have the reform broker downtown Josh Brown with me as my co-host for the 2 hours. Coming up also, we will look at News Corp with the Dow finishing the day up 32 points.
We're bringing you Bloomberg coast to coast.
Earlier we were talking about natural gas, but let's look at crude. Where are we going to see a bottom in crude?
I think we're starting to see a little bit of a short-term bottom. We're making new lows. We made new lows this week, but momentum's already turning up. And we saw the same thing last fall in October when crude oil was making fresh lows in price. Momentum was putting in higher lows.
JC, could you explain? So that's what they call a positive divergence. So even though it's making new lows, there are less sellers, or the selling is of a lower velocity. Can you explain why that's important and how that can actually help you determine when something might be finding a bottom?
Sure. We look at the relative strength index. We call it RSI, and what I look for is divergences. If prices are making new highs, we want to see momentum. We want to see RSI also making new highs. And if momentum is not, that's a bearish divergence. We know something's wrong. Same thing to the downside. If prices are making new lows, momentum should also be making new lows. And if it's putting in higher lows, that's a good thing.
And this can work for an index ETF. It can work for an individual stock or even a commodity. You can actually put a chart, the regular chart of price action, and then have like as an overlay or beneath the chart, the RSI index, and you can follow these things concurrently.
And that's the beauty of technical analysis. And you asked me why more and more people are looking at charts and looking at technical analysis, because we can look at broad markets. It's not just, oh, I specialize in technology. We can look at commodities and currencies and stocks, and it doesn't matter. So getting back to crude oil, sure enough, same thing happened in October. As prices were making new lows, momentum was turning up, and crude oil exploded from there. And it coincided with a bottom in the S&P 500 as well.
You also wrote recently about volatility, about the VIX. What are you seeing there?
Well, we've been looking at the volatility index, and we know it's negatively correlated with stocks. So if stocks are going up, volatility is going down, and vice versa. And right now we're at a level in volatility where I don't think we're expecting another spike. So if we're not expecting another spike, we're just looking for a dull volatility market. I think that's positive for stocks.
J.C. Parets, thanks so much for being with us from All Star Charts. You definitely have to come back and visit us again on Taking Stock. And this portion of Taking Stock is brought to you by